Hey guys, welcome to another video brought to you by Total Control Traders. For those of you that didn't watch yesterday's video, make sure you go check it out. Yesterday's video, we called out that there is a potential bounce coming as witnessed. Oh, I do apologize. I mean Thursday's video as witnessed by yesterday, Friday. So whenever you see weekday videos that says deep dive on it, make sure you take a moment to check out all the intro as well as the market deep dive, because there are things that I am seeing that will be potentially key reversals in the market as witnessed on Friday, as well as witnessed back here on the reversal and on, I can't remember, one of these two bounces as well. So check out the weekday market deep dive videos. Anyways, so on the weekends, I normally do weekend market deep dives, and let's get right into it. First one, SPX. What a nice bounce on Friday. We essentially held the GP from back here, the pandemic trend line touch to the February 16th high. So the GP was held. Now where are we going from here? Is this the bottom or is this just a bounce? A lot of people are asking that question. So let's get into the details, the nitty-gritties, and see if we can find out the answer for that. Now personally, excuse me, personally, I am anticipating this to be just a bounce, as we are. Now there's a few things that's indicating that to me. First, we are trading under the daily 8, where we closed right on it. Decent bull volume. However, yesterday's bear volume is still the bigger volume of the two. Or Thursday's bear volume, I should say. All right, let's take a look at the hourly. So on the hourly, it's a bit interesting because we did bounce from today or Friday from not right at the open, but after a decent drop from the first thing in the morning, 7:30, we opened up and we saw a big drop into new lows up until 9 o'clock, and then the bounce started. So if you were in the trading community, you would have seen messages about the bounce potentially starting from down here. And the bounce was a lot stronger than anticipated, which is amazing. For those of you that played this bounce, congrats. However, do keep in mind that this is essentially still just a bounce. We can see on the 30 that we came up to the key zone and we are rejecting from it right now, potentially forming a bull flag on the 30. On the hourly, there's not too much of a sideways action yet, but on the 30 we're potentially looking at a bull flag formation. So Monday will be the telltale sign of whether if this is the bottom. GP hold, the last GP that we must hold, we see from here. That is great. We have now lost the pandemic trend line, which is this one, going all the way back to the March lows. So we have lost that one. Oh, interesting. Wait, is it under or over? This chart keeps moving. Okay, so we lost it on Thursday, and Friday's bounce bringing us over it. However, we're going to need to see that continuation on Monday, Tuesday, following a bull flag for confirmation that the bottom is in. So right now is still just a bounce. Now let's take a look at other indicators. Again, focus is on NAS because it has been the cause of the pullback, the correction, the consolidation, whatever you want to call it. Personally, I'm looking at, if you're looking at NAS, this would be a consolidation. 12%, yeah. If you're looking at SPX, it might be a correction instead. So let's take a look. So this whole drop on NAS, it's a lot easier to see that there is an A, B, now the C. And I love where we're bouncing from. This, remember, keep your eyes on NAS. That is the key driver of the market for ever since, well, you could say the whole run, because growth stocks have been clearly outperforming. And this trend line could actually be drawn a little bit different. That might make a little bit more sense. Let's use the most recent. Yeah, there we go. So this pandemic trend line on NAS makes a lot more sense. We're seeing a bounce here and then rejection here, so looks a lot better from here. All right. So with NAS being the key driver, you want to keep an eye on it for whether it's the bounce or retracement or, you know, the bottoms in. I really like where we're bouncing from because this was a previous key resistance, 1, 2, 3, another 3 rejections, and then we finally got over it with an immediate backtest support and then another backtest support. So this is an obvious key zone versus back here, the previous high. We touched once, came back down, touched again, and then it's sort of just, it's not as clear as this zone. So when I saw where we're bouncing from on Friday, went in half sizing, so still relatively heavy, but didn't go all in because essentially it is still just a bounce. Look at this touch on the key zone and we're bouncing from it. Bull volume still not too convincing on the daily yet. Let's take a look at the shorter time frames. Shorter time frames not convincing yet either. We can see volume climax coming into the bottom, touch the key zone, and then now we are bouncing. The good thing is the hourly trend has now I don't know, you can't call this hourly trend change yet. 30-minute trend, we still need a higher low to confirm a 30-minute trend change. So remember, full bull confidence requires 3 stages. First, 30-minute trend change, higher low, higher high. Then similar idea on the hourly, higher low, higher high. And then the 4 hours, higher low, higher high. So there is no full bull confidence yet. We're gonna need to cross over this previous high of 12,800 mark to make a higher high and then come down for a higher low before we can confirm the 4-hour trend change. So essentially this is still just a bounce right now. Dow we're not going to take a look at because Dow is essentially still stronger comparing to all the other two. The ABC is a lot weaker comparing to the other two as well. So we're just about to make 4-hour higher high already. Dow is a lot stronger. Now let's look at the indicators, the key indicators that we look at on market deep dives to see how this is going to play out. Try to get an idea. Well, this is an interesting candle. Big gap up, big gap down. Anyways, so on the daily, again, for those of you that haven't seen it, this run up is a lot more cause for concerning comparing to the last run up. You know, it's 100% less, 1123% versus 1286%. However, the time that it took was only 249 trading days versus 1121 trading days. So the run up of this market and the bond yield 10-year over 2-year has been amazing lately. So that causes for some caution. If you're trading bulls, causes for some caution. Okay. From here, Biden, no, that's not it. This one was third. It's one of these two. Yeah, Biden announced the interest rate and then it caused a drop in the market. Now we're seeing a slow run back up. Not seeing any divergences. Divergence was back here. Slight divergence. You can see from here. That was a slight bear divergence, which has now played out. And now there's no, you could see that there's a, you could say that there's a, no. Yeah, you could say that there's a long-term daily bull divergence, but that's a bit too far out kind of thing. So wouldn't really call that daily bull divergence. From here, let's see what happens. Essentially, the weekly has run so far. Now we're potentially looking at a bull flag formation. Monthly, are we still extended? We are still extended on the monthly. So remember to check the monthly charts on all of these indicators as well as in markets. Right now, spinning top candle, and that's why it's still just a bounce. If we close March with this spinning top candle, it could very well be the top. Then we continue to sell off. We are still extended on the monthly from the monthly 8, so keep that in mind on SPX. I know chart's a bit messy, that'll be easier to see, so keep that in mind. We are still extended on the monthly 8. As well as NAS, we have now come back to nearly touch that monthly 8 now, so that is a good sign for NAS. And we are, the other good sign is we are seeing a bounce from here after these huge upper wicks. Okay, so always make sure to look at the longer time frames, keep those in mind, so you know, you have an idea of whether the market can continue running. Dow, this is interesting. I haven't looked at the Dow monthly yet. Looks like Dow is actually closing at new all-time highs on the monthly chart. And the bull volume is decent. So Dow stays relatively strong. All right. Now let's take a look at VIX. And before we get into VIX, let's take a look at the VIX structure, because the VIX has been popping. Projections are still higher. We can see the current price of VIX 24.66. Projection are still higher going forward. So keep that in mind. As this bounce plays out, it could be good opportunity to begin hedging. And that is part of my personal plan to potentially look to reverse my play into the bears. And the reason why I say that is, let's see, this one is not often. One sec, guys. Trying to sort out my drawing tools. There we go. All right. So on VIX, we saw a slight bearish divergence that is now playing out very strongly. From here, I would anticipate, as the bounce continues, come back down to revisit these two key supports and then start hedging from there. Excuse me, guys. Try holding it in. Yeah, so keep this in check. VIX is indicating that there is more upside to come. Bearish engulfing candlestick looking great for the bulls on the market. US dollar, opposite direction. So US dollars is actually very bullish, which indicates potentially on the longer run that the market needs further consolidation, which makes sense if you look at the monthly charts on the indices and the indexes. And from here, we are seeing a slight rejection from this previous key support. So backtesting it. Key is to see Monday, Tuesday, what happens from here. Whether if we're going to form a bull flag, we are a little bit extended from the 88. So whether if we're going to form a bull flag or whether if there's going to be a strong rejection coming right back down. So keep that on watch. There is no bear divergence yet. This has room much more room to run. RSI is only at 67, so a lot of room to run on US dollars. Cash is a position that you can use to make money. So keep that in mind. All right, so that's it for the market deep dive on the weekend video. Let's now take a look at the hottest tickers. First one, Bitcoin. Bull flag formation continues. Nothing interesting. No exciting volume. This is actually a very nice play out on this bear divergence. Let's keep this drawing on. On this bear divergence, we actually haven't seen all that much pullback before the bounce, so it's decent. Now let's see that bull flag formation. Monthly, I believe we are still very extended. Yep, so keep that in mind. Monthly, we are still very extended. This, what's happening right now, as long as we're holding up, that is great sign for bulls. However, it could be a long-term sideways action before the next leg up. Okay, next is Tesla. Now, Kathy's been buying a lot of Tesla. I was looking at the ARC trends, and this has been great. You know, we came back to touch the monthly 8. We touched the. We ended up touching lower than the most ideal zone, which is okay because we lost this lower trend line of this long-term channel on the monthly, but we touched the monthly 8 now, and essentially we held the GP of this November move. And essentially we held the key zone as well. The previous key zone of first run from SPX uplisting, rejection, came back tested it, and before the run up. Now there is this key trend line. This trend line is still in play. You can see the previous high to, there's no rejection here, but then became support, and support again before the bounce on February 23rd. We are extended from the 88. Now again, this wick is not real, so if you want to look at cleaner chart, real chart, use the 8 hours, and that wick is gone. So we can see backtest of the lower trend line from the channel, long-term channel. Okay, long-term channel here. So strong support on this lower trend line. Lost it ever so slightly. Potential for volume climax. No, not really. Yeah, but potential. Okay, so this is a reversal candle. It's so close to that reversal hammer. We're gonna need to see a couple days action to confirm this. From here, Monday, Tuesday is key. We're gonna need to see some green candles, but I like the way the Tesla is. I think I got our entry at 5. Didn't nail the bottom. It was around the trend line, 560, 550-ish, 560. That was our entry. Let's see some follow through from here. Now, the way I'm playing this is a bit different. I'm playing this with commons instead of the normal options, because option prices doesn't seem to be moving that great versus commons lately. Volatility is pretty high considering the drop that we've had, so that makes sense. Just keep that in mind if you're looking to play options on the bounces that's playing out right now. Next is PLTR. All right, so we lost this key support zone, this key zone, slightly before the bounce. Essentially, we held. Let's take a look at the closer time frames. Okay, so essentially we held on the daily, we held the trend line. On the hourly, however, it's a different story because we are now just coming back to backtest this trend line, and we are seeing a little bit of rejection. So the last time that we lost it, we gapped up above it. Let's see what Monday brings. Losing a little bit of faith on this play, so gonna need to see some decent bull volumes come in. Essentially, the play is still intact because of these two huge bull volume spikes. But as long as we're trading under the 88, it's okay to be late. Watch for the break of the 88 first. Next, XOM. Changed up the hottest tickers. XOM, oil play, amazing. We are making New highs. Well, not new all-time highs, but new 52-week highs. Long-term channel. And now we're breaking over this upper trend line. Last time's break got shut down right away. And then followed by 2 rejections. And now we are seeing a decent break on decent bull volume. Idea is to see continuation on Monday, Tuesday before a pullback. We are extended from a daily 8, but because of this break just breaking over the trend line, you're going to want to see a little bit of a pull away before the back test. So XOM looking great. Next, FSR. We held that GP, decreasing bear volume. Chart still looks amazing. Haven't made an entry on FSR yet. Will likely be doing it on Monday, Tuesday. Gonna want to see a little bit of an action. I like the setup of the chart. We are holding the GP, low bear volume, no divergences. Ideally, Monday, I want to see further flush down, make a bull divergence from, that's going to be something that looks like, you know, like that. That would be most ideal. Daily bull divergence, then we'll be entering with conviction. Right, and last but not least on the hottest ticker, and we're going to be doing a long ticker review this weekend. We're going to run through a ton of tickers to spot those golden setups. Last but not least, hottest tickers. I've decided to move Wayfair onto the hottest ticker. Love the way it's setting up, love where we're bouncing from, love everything about it. So we entered this play about a month ago. It's been choppy. You know, I've seen big greens. I think it was like at one point it was 70% green, and then now we're down to like, you know, 40% red. But essentially, remember this: Wayfair is a monthly bull flag formation that we're playing. It's a monthly. Okay, so it's going to take a lot of time for this to play out. If you watch this, huge upper wick, amazing monthly bull flag, lots of upper wicks. Huge stick for the bull flag, lots of upper wicks forming. But you zoom into the closer time frames, as long as we're holding this monthly 8, the play is still intact. So you zoom into the closer time frames, you see bull volume started to come in, and we are holding. Now let's zoom in again. We are holding this trend line even on the most recent drop. Okay, bull volume clearly outweighing bear volume. Love the setup on this. Huge bull volume coming in before. We can see spikes after spikes. So makes me think that we are essentially right now, let's see, this whole zone, I'm looking at it as accumulation. Okay, this whole zone, I'm looking at it as accumulation before the next leg up on the monthly. Keep Wayfair on watch. There's a reason why I'm moving it to the hottest tickers. I don't think many people are looking at it, but great setup. All right, that's it for the weekend market deep dive, as well as hottest ticker reviews. Hope you guys enjoyed the video. Don't forget to give a thumbs up. If you're looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel, where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer 7-day free trial to our chatting platform, where trading ideas are shared and charts are reviewed live. You get information that is invaluable, such as Friday's bounce, the last pullback, real time. Hope you guys stay safe and be in control. Thanks for watching. I will see you guys in the next video.